Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KROGER CO quarterly report. The KROGER CO offers a wide range of businesses and services, including combination food and drug stores with natural food, organic sections, pharmacies, general merchandise, pet centers, fresh seafood, and organic produce multi-department stores with apparel, home fashion and furnishings, outdoor living. Electronics, automotive products, and toys marketplace stores offering full-service grocery, pharmacy, health and beauty care, perishable goods, and general merchandise price impact warehouse stores providing grocery, health and beauty care items, meat, dairy, baked goods, and fresh produce items, food manufacturing and processing for sale in supermarkets, and online fuel sales through fuel centers. KROGER Co. stock price surge. A year of strong performance over the past year, KROGER Co.'s stock price has increased by a significant 19.2%, driven by a combination of strong financial performance, strategic business moves, and positive analyst outlooks. Several key events have contributed to this surge in stock value. Firstly, KROGER's robust market performance and investor confidence led to an all-time high of $66.19 in February 2025, with a 39.8% gain over the past year. This was followed by strong Cone 2025 earnings and upgraded guidance, which propelled the stock to another all-time high of $73.66 USD. The company's consistent dividend payments for 20 consecutive years and analyst upgrades from firms like Telsey Advisory Group, Citi, and Morgan Stanley further supported its growth. Additionally, KROGER raised its full-year sales forecast in June 2025, leading to a 7% jump in shares. In September 2025, the company improved its fiscal year outlook, including identical store sales, operating profit, and earnings per share. Analyst rating upgrades and price reductions also contributed to the stock's increase, with Roth Capital upgrading its rating to buy and raising its price target. Overall, KROGER Co.'s strong financial performance, strategic business moves, and positive analyst outlooks have driven its stock price surge over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by e-commerce sales growth, increase in external sales at food production plants, and third-party media revenue. Additionally, identical sales excluding fuel have increased due to higher spend per item and growth in pharmacy, e-commerce, and fresh sales. On the other hand, revenue decline is mainly attributed to a decrease in grocery volumes and supermarket fuel sales. The negative impact of labor disputes in Colorado has also contributed to the decline in identical sales, excluding fuel. Net income and profit margins experienced mixed results in Q2 2025. While net income increased by 30.7% year-over-year, adjusted net earnings decreased by 2.2% in Q2 2025. Operating profit margin excluding fuel rose by 5.9% YoY in Q2 2025, but adjusted operating profit margin, excluding fuel and items, saw a more significant increase of 10.9% YoY during the same period. The reasons behind these changes are unclear, but may be linked to the company's review of its e-commerce operations and potential adjustments to its business strategy. The company is indeed generating positive operating cash flow, a trend that continues from the previous year. In fact, net cash provided by operating activities increased to $3,688 million in 2025 compared to $3,464 million in 2024. This upward momentum is further supported by the company's substantial liquidity position, boasting $4.9 billion in cash and temporary investments as of August 16, 2025. With this robust financial foundation, the company appears well-equipped to meet both its short-term and long-term needs. The company's financial health has undergone significant changes in recent times. A notable shift is observed in its debt level and interest expenses. The total debt has increased by $54 million as of August 16, 2025, although the absolute figure remains undisclosed. However, a more pronounced change is evident in the company's interest expenses. In the second quarter of 2025, net interest expense skyrocketed to $144 million, representing a staggering 71% increase from the previous year's $84 million. This trend continued into the first two quarters of 2025, with a 65% surge in net interest expense to $343 million compared to the same period in 2024. These substantial increases indicate a significant shift in the company's financial landscape, warranting closer examination and potential adjustments to mitigate these rising costs. The company's financial performance has shown a positive trend in certain segments and regions. Notably, the retail operations segment has demonstrated growth, with revenue increasing by 2% to $67,000 due to higher sales. Additionally, FIFO EBITDA rose by 6%, reaching $1,385. These improvements indicate a strong performance from this segment, contributing positively to the company's overall financials. Management is optimistic about the company's outlook, citing several key initiatives aimed at driving growth and improving profitability. A comprehensive review of e-commerce operations is underway to boost sales and earnings, with a goal of achieving double-digit e-commerce sales growth over time. The value creation model is expected to deliver consistent total shareholder returns within an 8–11% target range. Management is committed to reinvesting savings from store closures into the customer experience and prioritizing dividend payments and share repurchases. The company has sufficient liquidity to meet its needs, with a focus on maintaining investment-grade debt ratings. Overall, management's strategy emphasizes cost savings initiatives, administrative efficiencies, and strategic investments in key areas such as pharmacy sales and promotional pricing. The company has made significant acquisitions in recent times. A key partnership was formed with Ocado International Holdings Limited and Ocado Group plc, although the terms of this agreement remain undisclosed. Additionally, the Kroger specialty pharmacy business was sold, marking another notable acquisition. No divestitures were mentioned in the summary. KROGER CO has a history of rewarding its shareholders through both dividend payments and share buybacks. The company has paid out significant amounts in dividends, with $211 million allocated towards this purpose. Furthermore, KROGER has also engaged in share buybacks, investing $22 million to repurchase shares. This demonstrates the company's commitment to returning value to its investors while also maintaining a strong financial position. That concludes the financial summary for KROGER CO. Feel free to comment below, and I will be happy to answer them when possible.